a big cold perhaps in our own markets as well. There's been a risk-off sentiment globally, as you have seen on your screen and as you have watched in the last couple of hours. As we speak as well, the Shanghai market is down 8.5%. So that is the extent of the damage that many Asian markets are seeing. Hang Seng is down about 3.5% or so. And the volatility in the US markets has spiked significantly. So that's one of the indicators of trader bearishness or trader concern. The CBOE VIX surged to almost about 28 levels in the global markets. As you can see, 46% rise in the CBOE VIX. And for the week, the CBOE VIX has doubled. This is the biggest weekly rise that we've seen ever in the VIX. So that is the sentiment barometer that you should watch. The Dow, of course, has crashed about 530 points globally. And in our own markets too, we've seen big sell figures, the highest that we've seen this year. So the internals are looking extremely bearish. The saving grace perhaps is the fact that on Thursday and on Friday we saw some amount of the correction. So whether we preempted that or not, only time will tell. But Reema, hi, morning. Anuj, morning. The question that we're asking and what everyone has asked during the investor camp over the weekend as well is whether Nifty will defend 8,000 and whether this is still a bull market.
Morning, Sonia. So I think it's still a bull market, but you know, we are set for the worst day of this bull market. Let's make no mistake about that. And I think, you know, the fact that we have already fallen on Thursday and Friday will have no bearing in today's trade. In fact, the late recovery in Friday was something that was used by the bears to sell. Our market had already broken down. The 8,300 to 8,600 range was broken down on Friday. Somehow the Nifty managed to recover a bit in late trade and managed to have a closing around the 8,300 mark, the adjusted closing, that is. The final closing was still around 80 to 80 thereabouts. So the range was broken on Friday itself. And look, you can't ignore this FIS sell number. The FIS sell number was 2,400 crore. And my sense is that most of it came in last hour of trade when the market saw recovery and when the volumes actually picked up. Yes, DIS did buy about 1,500 crore. So that's a bit of a saving grace. And you'll remember on Friday, you know, asked me about the F&O data, and it was extremely bearish on Friday. You know, FI sold in index futures, 2,400 crore. Look at the unwinding of index longs, 34,000 index longs per unwound and 70,000 index shorts were added. For last 2 and 3 days, retail and prop have been stuck. They have been buying dips. The data is pointing out. The pain is there. Every retail and prop client, or a lot of retail and prop clients have been buying these dips. On Friday, the hope was that the US market will recover and Monday morning, at least there will be a short covering bounce, which might get sold into. Now that's taken out of the way. So what happens? A lot of people who are stuck will have to sell today in the morning. And sometimes, you know, even if you don't want to sell, but the market forces you to sell. And that is what's going to happen in the first hour of trade today. SGX Nifty, I think, is being conservative. You know, given the way Shanghai has reacted, given the way Taiwan has reacted, given the way some of the other global markets have reacted, the bulls would be happy if the market actually gets away with 2% fall. I won't be surprised to see a sub 8,000 number during this week, maybe even today. You know, but that's the extent of fall that could take place in today's trade, because at the end of the day, we are in this global mayhem environment. The other thing which will go against this market, and which is where, you know, I think some of the market savviness is needed in finance ministry as well. This is the worst day to do the IOC FPO. You know, look, who's supporting this market? LIC is supporting this market. Nobody's going to buy IOC today. You'll have to tell LIC to bail IOC out. LIC will have to put so much money to buy IOC that they'll have to move the money from secondary market to buy into some of the IOC, you know, OFS or FPO, whatever it's called. And that, I think, is going to suck out a lot of secondary market liquidity from domestic funds. So it's a bad day. You know, things can still change. They can still take a decision on not doing IOC today because, you know, make no mistake, there's going to be no appetite for IOC today, even if, you know, the stock has fallen so much already and everything is working in IOC's favor because of crude prices. The other problem for this market would be that even IT won't be a safe haven. On Friday, which index fell the most in US? It's the NASDAQ. Which stocks fell the most? Led by Google. Look at the tech ADRs. They were down. So even IT may not offer that much support to the market. The only saving risk could be pharma stocks, but pharma is not a big index for our market. It will not move the market.
The question, I guess, what everyone's asking now is, and everyone perhaps doesn't want to, you know, acknowledge is this fall reminiscent of, the early signs that we got in 2008, because there's severe demand concerns across the globe. China is slowing down significantly, and now the US is starting to reflect that. So is this fear of 2008 overstated, or do you think that we could be perhaps heading there?
The markets move in 7-year cycles. So 2001 we had something similar, 2008 we had something similar. So you can say 2015 is this something similar? But I mean, look, in 2008 we had structured problem of Lehman and a couple of subprime issues. The issue here is this time around, this market, a lot of the global markets have been supported by a lot of easy liquidity. Once that easy liquidity is out, the market will go through a period of pain. That everyone knows. So far you've been delaying it. At some point that pain will happen once the Fed raises rates. So something like that will happen. But the sense you get is that it's still not reminiscent of 2008. Things could change, of course, but as of now, you'll have to say that this is not similar. But the way US fell on Friday, it was disconcerting. I mean, it was telling you that something has happened to equity markets globally, and we won't be immune to that. Yesterday, by the way, the only market that was trading was Dubai. They opened on Sunday, and it was down 7%. So clearly, there's a bit of a panic in the market.
Okay, Rima, hi, morning to you too.
Hi, Sonia, good morning. Well, I clearly think you have to brace yourself for a lot of turbulence today. Just look at the way China's collapsed after losing 12% last week. Right now, it's down close to about 8% Nikkei is trading at a 5-year low, so that market is down close to about 3% Hang Seng has already entered into a bear market, which means it's fallen more than 20% from its recent peak. And Taiwanese in Shanghai is also selling off very sharply. Policymakers are trying to stymie the fall, so over the weekend, you had Taiwan, which is curbed short selling of borrowed stocks. China has allowed pension funds to buy shares for the first time ever, and all that is not helping because Asia is trading virtually at a 2-year low. And SGX Nifty, as Anuj was telling us, right now is suggesting a fall of close to about 2%. But Anuj, coming to our own markets, typically mid-caps underperform when there is a correction. How do you expect the broader markets to perform?
Yeah, and I think in that the great aspect about this bull market has been the equity cult. Me and Sonia were at investor camp over the weekend in Chennai, before that in Bangalore. None of the market participants is worried about what was coming up today. In fact, we had such high audience on Saturday. After the day, it looked like the markets are going through a big correction. Everyone's looking for buy ideas, and the sense everyone's getting is that this is a multi-year bull market, which is going through a bit of a problem right now. The way to play our market this year has been bottom up, and I think this is the way it's going to continue to remain like that. A lot of stocks will become great buying opportunities, maybe not today, but once the dust settles, maybe once the expiry is out of the way. I think you should select 5 or 10 stocks which you always wanted to buy, but you just could not because these stocks ran up 100, 200%. That basic texture of the bull market, domestic bull market, hasn't changed. And you can make a list. Your list could be different from someone else's list. But the 5 or 10 best stocks which have done well this year will continue to do well, even if they correct. So that would be the way to play this market. Today is not going to change that texture of the bull market, even if it's going to look ugly in today's trade.